Quick explanation of the topic: 3 types of accounts. What is an account? In a business, an account is a group of all transactions for a specific item. For example, if your business pays rent, then payment is recorded in the rent account. So any transaction related to the rent will be in the rent account. What are 3 types of accounts? There are 3 classifications or types of accounts in the world of accounting: real account, personal account, and nominal account. What are real, personal, and nominal accounts? The first one is real account. All assets of a firm, which are tangible or intangible, are called real accounts. For example, furniture, building, equipment, machinery, etc. The second type is personal account. All accounts related to individuals, firms, companies, any legal entity is a personal account. For example, a debtor, creditor, bank, etc. The third type is the nominal account. Accounts which are related to expenses, losses, incomes, or gains are called nominal accounts. For example, purchase, sales, salaries, and more. Let us discuss more examples. Investments. Investments is a real account because it's an asset for the business. Accrued income is a personal account because it belongs to a party. Loan is a personal account because it belongs to a party. Loose tools are assets for the business, so it is a real account. Drawings, usually done by the partners, are personal account. Goodwill is an asset for the business, so it is a real account. Cash is a real account as it's an asset. Depreciation is an expense for the business, therefore it is a nominal account. Bills payable is a personal account as the payable is due to a particular party. Petty cash is again assets for the business, so it's a real account.